Hi guys, Mark Mains here with the Realty Firm. I'm sitting here with Bruce Smith from Centum Future Mortgage Group. Today we're going to talk about the interest rates as well as the rules that have changed in the last year. So Bruce, we've seen a provincial rule change, we've seen a federal rule change. Over the course of the year we've seen 3 interest increases. What's going on with the market right now? How has that affected people getting mortgages? And then we'll talk about what you see the future being, because I've heard that there's going to be a couple more interest rate increases this year.
Okay, well, let's first talk about what's happened in the past. So within the last year, there's been 3 quarter-point rate increases back in July, September, and January of this year. So people say, well, why does that matter? Why is that important? So I think I always go back to the point of buying a home. The average purchase price of a home in London now is $320,000. So people think they're buying a $320,000 home, but in reality, it's not what you pay for the home initially, it's how much it costs you in total. So to buy a $320,000 home today, it costs you about $475,000. And that's why the interest rates are so impactful. So going back to the fall of last year, interest rates, 5-year fixed rates were about 2.5%. So that $320,000 house would have cost you about $348,000. So you can see that, and with a future increase, let's say it goes up another quarter point, and it's now 3.5% for a fixed rate, and I'm just using round numbers, then you'd probably be looking at buying, become a $488,000 house by the time it's all paid for. So that's why it's such impactful what happens in interest rates.
Okay, so you talk about the impact of another increase. Now, as I said, I've heard that there's supposed to be 2 more interest increases over this year. What validation is there to that? Is that speculation right now? Do you think it's going to happen? The federal government, if I'm not mistaken, is kind of putting in a safeguard because it seems like interest rates are inevitably going up because there's more confidence in the economy right now.
Yeah, well, you mentioned some of the rules, some of the changes. They put in a stress test in January where you actually have to qualify at an interest rate 2% more than the actual rate you're going to pay. So the government is anticipating that interest rates are going to go up, and they put in that 2% buffer just to make sure that people can still afford their mortgages if that was to happen. So will rates go up again? I've heard talk that it may, and the Bank of Canada looks at interest rates 8 times a year, so there's a set schedule. Will it happen? I don't have a crystal ball, so we don't know, but there are a lot of factors out there, pro and con, that suggest, yeah, interest rates could go up again.
Okay, great. Do you have anything else to add on the subject?
I don't think so. It's just a lot of things that happen in terms of Canada's economy. It's controlled by factors outside of Canada, or outside of London. So what happens in London really has no impact on your interest rates. We're looking at things like inflation. So minimum wage has been increased recently, so that leads to inflation. So that would suggest the government would want to increase interest rates to try to, put a hold on inflation. You look at immigration to the city, immigration to the country, that impacts supply and demand, which is going to impact housing prices. You look at things like the NAFTA negotiation, with the stroke of a pen, manufacturing in Southwest Ontario could be wiped out. So these are all things that, and there's many more factors that could impact, what happens in the housing market moving forward.
Okay. So if you need to reach out to either myself or Bruce, my number is 226-700-5190, or you can call Bruce 649-2502. Call us anytime, and we hope you have a great day. Thanks so much.